Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 14th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement in your portfolios, but please do that in your own way. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get it on with the economic data across the pond. Let's talk about Japan real quick. They did have revised industrial production, came in at negative 1.8%, expected to be a negative 2.2%, so better than expected on that front. Good for the overall markets there. And then we also got average hourly earnings index out of Great Britain. That came in at 2.4%, lower than the expected 2.5%. That's not great. And then we got the unemployment rate out of Great Britain. It came in at 4%, expected to be 4.2%. So that's pretty good. And then flash GDP out of the European region came in at 0.4%, expected to be 0.3%. That good for the overall economies. And then we also got here in the United States our NFIB, which is the National Federation of Independent Businesses Small Index. Not a really widely looked at number, but something I really like to look at because it gives you a real gauge of what this small business is doing and how they're feeling about the overall economic picture. That being said, that's the biggest driver of our economy, and those guys came in at 107.9, expected to be 106.9, so better than expected on that front. That is good for the overall economy. Importer price index came in at unchanged, expected to be an increase of 0.1%, so not really terrible there. And that's about it for the economic data. Over to the markets, we got crude oil slightly off today, but right at the point of control. We talked about this a couple of times. We had expected to want to bounce around in between these Fibonacci levels because the point of control lands right in between there. So we could see those support and resistances acting very strongly because the market wants to migrate towards where we are right now. So not a whole lot of room unless we get a major data point maybe out of the oil inventories tomorrow that we should get. That could be a catalyst to move that market. We should get on, I think we get, crude oil inventories we do to get some tomorrow. So that would be the biggest catalyst to really get this market moving. So wait till tomorrow if you're going to be trading crude oil, I guess, unless you already have a position on. All right, gold again. Busted below that 2,000 level, but I've talked about this. They are going to really defend that level and try and keep it above 1,200. That is just a major psychological level. We are above that right now, but albeit just barely yet. Yesterday we did test that 2,000 and again today. Right above that right now. Bulls really want that market to stay up there. Either that or have a big slam down. Maybe to the 23 Fibonacci level just to shake out all the real weak hands before we start rallying. This chart setup does not look like a bottom, to be quite honest, right now. Then Bitcoin coming back down. I thought it was going to stay in the 6,000s. Today it really has fallen out of bed, going down, looking like it wants to test the lows again. This is not a good sign for Bitcoin. You can see continued lower highs, and we haven't gotten that lower low yet, but that would be what one would expect with the way that the market's kind of setting up. Maybe get a tweezer bottom here again, but it just, to me, does not look very good if you are long Bitcoin. Bonds starting to roll over a little bit. We did get that massive rally on basically the turmoil in Europe with Turkey, wondering if they're going to even survive. That was the cause of the rally in the bonds, strengthened the dollar as well. Now we're starting to get a little overdone. Market's starting to roll over a little bit. Yeah, they can come in and buy us up and try and support that, but the fact of the matter is there's a mandate going forward that the Fed's going to continue to increase interest rates, so bonds can't really move up a whole lot. All right, VIX, yesterday we got a nice big move to the upside. If you look at this as a chart pattern, this would definitely look like a top. VIX doesn't really follow those chart patterns so much, so but we are still in the teens with VIX being off a little bit. Let's talk about the overall markets. We've got the Dow Jones Industrial Average up nicely, up over 100 points right now after yesterday's sell-off. This could be just a breather as we go down to look to test this 23.6 Fibonacci extension level that lines up perfectly with the point of control. I would expect that to be a magnet to come down and at least test that for the Dow Jones. This market's not setting up on this chart very well for any type of bottom. Nasdaq's pretty similar. We've talked about this 61 Fibonacci extension that it needs to stay above that for the bulls to remain in control. That is going to be something they're going to be looking for. It lines up with the 9-day moving average, so there's a lot of different levers and pulleys here that people are going to be looking at for that support and resistance and a settlement. So right now it would look pretty decent for it, but to me, again, it just does not really have a very good setup for the charts at all. Now with the E-mini S&Ps, yesterday's slam down looked like we were going to continue to move there to the downside. Today we're actually moving quite nicely to the upside in E-mini S&Ps. As you can see, we're up almost 14 points right now, and it's looking like it has broken to the upside. I still don't think it looks like a very strong market setup. It just kind of looks like the market is migrating that way anyway. All right, so up 14 points on the E-mini S&Ps. Not a whole lot to see here with the daily chart. You know, we had a nice big couple of moves yesterday. Ended up close to the lows of the day session. Overnight session started rallying as those shorts began to cover. Not really a whole lot to say about overnight inventory. I guess you could say that it was predominantly long, which could have been this catalyst right as we opened up, slam down, take out some of those longs, flush them out, and then continue to the upside, which is what we've done now and are very close to the highs of the day session. So that being said, up a little bit, but just not a whole lot to read in these tea leaves right now. All right, a couple of things. I don't know why I have General Dynamics up here. I'm not really looking at General Dynamics. I should be looking at Home Depot for my earnings trade. And yesterday, I really couldn't come up with a discernible direction. A lot of these stocks have been coming out with better than expected earnings, but they've been getting slammed. So I thought Home Depot to the upside. I talked about this yesterday in the daily market commentary. I actually put this in as just a short puts. As soon as I got filled on it, I decided to turn that into a strangle. So I guess you could say I legged into the strangle in a sense. And what we did here was I went into the August that expire on Friday, and I originally sold the August 185 puts in there for 65 cents. Then I decided to add in the 205 calls in there for 74 cents, both right around that 16 delta. And that total credit is $1.39 total credit on this strangle. And then I was able to take it off for 26 cents this morning because it stayed inside that market maker move, which is what we expect from this volatility around these earnings, is that is generally overstated, so we can take advantage of that. Not having a market direction that I was really confident with, I decided to go with the strangle, which is what we talk about in those earnings videos for options trades during earnings, I should say. That being said, that worked out quite nicely. Got out of that one for just a little bit over $1 winner. And then on to Facebook. Facebook's kind of teasing me right now. I think, you know, we talked about this, that I sold these calls after the whole debacle in Facebook. I'm being tested on the probabilities right now. Earlier this morning, we were in the 179 handle. I'm short the 180 calls, so it is right there. I'd like to get any opportunity for it to really dip down there and get close to that 179 more so, closer to the end of the day, because obviously any type of move to the upside is not good above that 180 level. All right, so kind of playing this back and forth. Might end up taking this off for a loss as well if I get that opportunity today. I thought earlier on this morning when it was in that 179 handle we were going to stay there. Obviously that was wrong. We are pushing to the upside, but that doesn't mean that we aren't going to test that in the next day or so. So that's what I'm looking for with Facebook. That's about it for the market commentary. Check out Thursday's webinar is going to be on the Christmas tree. All right. A lot of you guys haven't heard of it. It's usually called a different name. We called it a Christmas tree on the floor. You could think of it as a 1x3x2 or something like that. It's in the butterfly family, let's put it that way. And that's about it. Go to protraderstrategies.com, get set up for the Christmas tree webinar on Thursday. All right, if you can't take that, take it easy.